But we start with the growing ranks of the nation's unemployed and Bloomberg's chief economics correspondent, Rich Miller. Rich, it was reported this week that the unemployment ranks swelled to 9.5%. 467,000 more people lost jobs last month. What's it mean?
I sort of think of the economy sort of in this way. In the first quarter, we were in the ring with Muhammad Ali. We were getting hit every which way but up. Now we're in the ring with Floyd Patterson. We're still getting our proverbials whooped, but it just doesn't feel as bad. The jobs market is going down, but just not as bad as before.
And we probably have 7 or 8 viewers who remember Floyd Patterson, the former, heavyweight champion, Rich. Let's talk about the short term first. Unemployment does remain stubbornly high. It's growing, yet markets are up 30%. Some banks are starting to repay TARP funds. Should I feel good? Should I feel worried?
I think you should feel a little bit better than you did earlier, but you know, still worried. I mean, it's a lot like what last year, right? In the middle of the year last year, we were starting to talk about a recovery, and then we sort of got hit by a double whammy of rising gas prices and then the sort of Lehman bankruptcy. This time we got rising gas prices again, so that sort of, you know, throws into question whether we're going to get this recovery. But I think, you know, what's helping us this time is that the governments, the central banks, are determined that we won't have a sort of rerun of Lehman. So I think what we will get is a recovery, but it's going to be sort of a feel-bad recovery.
Let's go back to the longer term. When will the jobless rate get back to what you economic experts call, I believe, the median-term equilibrium of 5%?
Well, I mean, there's a problem. I mean, some of the economic experts are saying that equilibrium rate is no longer 5%, and maybe it's 6% or even higher. I mean, the reason for that is we've had a lot of jobs permanently destroyed, you know, in the automobile industry, unfortunately in the media industry, and we've also had, you know, what in the past were the big job-creating states like California and Florida. They're on their backs and will be on their backs for a while. So even if you say the equilibrium rate is 6, it's going to take years and years to get back to 6. So we're in for some tough job market.
Rich Miller, you always bring equilibrium to us. Thank you very much.